Hello, everyone, and thank you for attending today's session on governance and diversity. I'm Julianne Racine, a director in the Alternative Asset Advisory Services Group at Duff & Phelps, the Kroll Company. Before we begin, I'd like to cover some brief housekeeping items. This webinar is being broadcast live. We suggest you enlarge your media player to full screen when viewing the presentation. We would like to have an active discussion with our audience, so we encourage you to submit questions throughout the presentation. You can submit the questions electronically through the webcast console Q&A widget. If we don't have a chance to answer every question, we will be sure to follow up with you directly after the session. A recording of today's session will be posted to the Due Diligence Insights page on our website in due course. Earlier this year, Duff & Phelps announced a plan to change its name to Kroll, the world's premier provider of services and digital products related to governance, risk, and transparency. Certain businesses, such as ours, are using Duff & Phelps, a Kroll business, for a transition period. So thank you again for joining us today. We're going to get started with our session. I'm going to ask our panelists to introduce themselves. Janita, would you like to start?
Oh, sure. Good morning. My name is Janita Mazur. I am a senior principal at Cigar Holdings. We are an alternative asset management platform based in Montreal. I have 25 years of experience in financial services, both on the sell side and the buy side. And I've been very involved in, most recently in venture, where I find a lot of innovation and exciting ideas being executed there. And I also chair the Council of Urban Professionals, which is a non-for-profit D&I advocacy group. Thanks for having me today.
Great, thank you. Gary?
Hi, Gary Linford. I'm the founder of Highwater. I set it up 15 years ago. It focuses on governance to the private equity and hedge fund sector, 220 clients, and they spread pretty evenly across the world, although perhaps concentration in Asia and New York, I would say. Thank you.
And Michelle.
Hi, everyone. Michelle Noyes. I head the Americas for the Alternative Investment Management Association, or AIMA, your friendly trade body for hedge funds and private credit. We have been around for 31 years, headquartered in Europe with offices all around the world. Governance has been an important topic for us and one of our more referenced sound practice guides. We're in the midst of updating that yet again. I believe that will be the 4th edition coming later this year. Diversity and inclusion is also a really important and current topic for the association and our members, and a file that we're quite active on. So couldn't be happier to be here at the intersection of both of those topics.
Okay, great. Thank you all for joining today. So for today's panel on governance and diversity, we're going to talk about the latest areas of focus in the private fund due diligence space, as well as explore diversity among board members, among the boards of directors. So Gary, why don't you start us off and let's talk about those governance issues or items that are keeping you busy or up at night.
Sure. Thanks, Julianne. I think the best way to answer that is probably just give a few examples of what I'm facing right now, perhaps this last quarter, the sort of things that as directors we would need to address at the point of the occurrence, rather than, have an ODD team come in 12 months later to review it and find that there's a decision they don't like. So what are the things that we're looking at that we think we add value as independent directors? SPACs are a topic of choice, very topical at the moment. And what we find with SPACs is lots of conflicts. We have some hedge funds that wish to invest in SPACs where the manager invests in sponsor shares of SPACs, big conflicts, and obviously there's issues there that we need to resolve. I'm going to just give you a few examples and I'll come back and sort of focus on the key theme. Recently, there's a fraud in a Chinese listed stock. It is suspended. We have a fund that has a position. It has a special investment class, but of course, this doesn't fall into that. How do we move it across? Do we have the right language? Should we go out to Duff & Phelps and get a third-party valuation? What do we do? We have issues with sort of trade errors where one might not argue that, one could argue that it's not a trade error, but we need to address our trade error policy. So, for example, we had a fund that had a SPAC mature. It should have elected whether to take the shares or not. The trader forgot to, found out on Monday that he had missed it. Do we argue with the manager that's gross negligence? Do we argue with the insurance company that was a trade error? Things like that. So what's the common feature here for us? It's conflicts and it's valuation over and over. We see as directors our managers straying again from their strategy into more and more illiquids, sometimes with appropriate disclosure, sometimes outside of that disclosure. It's our job to make sure that we look at liquidity very carefully. If we all think back to the global financial crisis of 2007, 2008, that was a key theme, right? So we're starting to see that creep in again. And part of that is driven by the fact that interest rates are so low, and so people are chasing return. And often that return is in longer duration, more illiquids. And so they're finding their way into strategies where we have to mark the NAV every month and calculate the manager's performance fee and accrue it. And so getting that NAV right, dealing with the conflicts and dealing with the valuation issues are very important. And then secondly, under conflicts, I would say one of the features of COVID is the lack of travel by the ODD teams, and not everyone like Duff & Phelps has teams all over the world. So therefore, we're finding a lot of our managers are getting more capital. So suddenly the long-short pool of capital now has a long-only pool of capital next to it. Before we know it, we've got an ERISA pool of capital next to that. Then we've got a leverage version. And so dealing with the conflicts of allocation of expenses and other sort of cross trades and things like that across these different pools of capital with managers, particularly when it involves illiquids as well, is something we need to stay on top of. So I won't say I'm losing sleep, but generally those are the issues that are keeping me more attentive to what my managers are doing.
What about because of the recent events and with COVID, and you mentioned ODD professionals not being able, to travel? What about the fact that there are folks that are working from home still, or maybe it may be permanent, or working in remote locations? Is that anything that is sort of a focus or something that you as a director might pay special attention to?
Well, it's important, I think we'll chat later about, an effective board. But one of the things is you need time now to deal with a lot of the ODD team that might have gone into the manager and actually viewed documents. While they can't, they're increasingly turning to the independent directors to verify things they're being told by the manager. So firstly, have the capacity and the time to speak to the investors. There are too many directors out there who do not want to engage with the investors and sort of just refer it to the IR department. But I think part of the investor's job and the ODD teams like yourselves, when they're doing due diligence and they can't get to a manager. I mean, if you have a manager down in Brazil, you may not be wanting to travel there right now. You have to verify information. How do you do that? Independent verification with the fund administrator, of course, but the independent of clarification. And so we find that setting aside time to take calls from investors and giving them, appropriate opportunity to verify things is very important, Julia.
So I don't know if any of the other.
Something there?
Yes, please.
Please. What we are finding also in the private markets, especially around due diligence and ODD, is how much more important references have become in the due diligence process. And so managers should expect both formal reference checks as well as informal reference checks. So I've been encouraging peers, particularly peers who are women and of people of color, to keep in touch with your networks, keep people abreast of what you're working on, the deals you're working on, the deal flow you're seeing, keep them actively apprised of what's going on, because you never know when that informal check could come in, and you never know when that co-investor that's sitting alongside of you on the cap table, it can also be a very strong reference for an LP or some other source of capital. So I just encourage everyone to keep active networks in this time when there is limited travel, and continue to build your networks, right, with co-investors and other sources of capital.
Absolutely.
Great, thanks. So, Michelle, in regards to directors and their focus on when a fund manager claims to have an ESG strategy or sustainability-focused strategy, what are your thoughts on that? And, what should perhaps directors be considering or asking?
It's the name of the game is doing what you're saying you're doing, which is, not dissimilar to most things. When it comes to this disclosure and actual follow through and documentation. So, I think you sort of have to be living under a rock not to notice the ascension and the importance of ESG and responsible investment these days, driven both by regulatory change, particularly out of Europe, but also by investor sentiment and investor preference. And, of course, the complexity is both not all investors doesn't mean the same thing to every different investor. They have different ways of thinking about it, different preferences, and different triggers. And at the same time, a lot of the ESG frameworks are really built for a long-only equity investing type world. So, we at AIMA are spending a lot of time on where it's not a neat fit, the shorting, the structured credit, the private credit, all of that more challenging area. But, I think we've seen particularly, when we look at the U.S. regulatory approach, it's really about not greenwashing, right? Looking through and carefully considering. I think a lot of managers find that things they were doing before and considered under the sort of the bucket of governance, that's always been a strength of hedge fund investing. So some of that actually does fall within an ESG framework, even if they don't think of themselves necessarily with that label. So they should think about that and document it. But at the same time, they shouldn't be overstating what they're doing, because there are investors, and now the regulators and the SEC has come out on this, that they're really going to be following up, right? So you want to be able to make sure you're evidencing this. AIMA has a due diligence questionnaire that's been around for quite some time for ESG, based on the work of principles of responsible investing. It's worthwhile running through that, because again, I think it'll pick up some things that you're already doing, as well as provide examples, right? If you're saying, investors are going to be asking, and hopefully directors as well, what are your data sources? What is your oversight? What is the seniority of people you have verifying all of this? Are you hiring new people? So it's not something that should be taken on glibly just because it's the latest investor area, but really needs to be treated with a lot of effort. And we're seeing a lot of movement from our members to bring on consultants in this area to really, get their feet around having a policy and evidencing that through their investment process, as well as what they're doing as a firm. And, that'll be the bridgeway that we talk about diversity and inclusion. But there's, a focus on what is their recycling plan internally. Are they using reusable glass bottles? Are they in an energy efficient business? How are they contributing and being a good member of their community? So it's not just investments, but that investment part is very important as well.
Do any of the other panelists have any thoughts on this?
I don't think, please go ahead, Gary.
No, go ahead.
Oh, I was just going to mention that one just can't overlook the social component of ESG, specifically here in the U.S., with the increased conversations around race and race relations and wealth gap issues, and the key solutions, right? And the major drivers of solutions I've heard, which I think will be effective, some more short term, others longer term, is just building the pipeline of capable finance professionals who can potentially serve on boards with Gary, and govern funds, become investors, and actually become great contributors to society and financial services. I think another piece is just the opportunity gap in terms of funding. Specifically in venture capital, less than 2% of all capital goes to women and people of color, which is just appalling. When you think about that specific sector, having so much a focus on innovation and thinking outside the box and thinking new and differently, equally as upsetting as that could be or disappointing as that could be, you have this great opportunity that venture has to kind of pull the rest of the asset classes with it. And you're seeing that change happen with micro funds being led by women, more climate change funds, more social impact funds that are led by people of color and women and others. So there is a tide that's shifting, I think, and I'm hopeful that it's a more permanent stay than just maybe a trend. And we'll see how that shakes out. And I think the last piece is that the education gap and the education opportunity. And you can look at infrastructure and lack of access to internet and computers. There are still deserts, tech deserts in this country. And there is the opportunity to ensure that every child is educated in a way where they can pursue their dreams and become a member of the economy and society in that way. So those are the three prongs there. And I think that ESG investors, especially on the private side, have a really interesting opportunity set to help impact all three of those areas.
Yeah, thanks, Janita. And what I wanted to add to the ESG topic was obviously governance is in the acronym, so it's an important feature. But governance of what? And so from a fund board director, and I distinguish very carefully here, the fund board from the investment manager board or from the investment manager firm. From a fund board, when we look at the manager, I'm looking at governance through two lenses, the investment side and the corporate side. And so on the investment side is what you said earlier, or what Michelle said earlier, do what you say you're doing. Don't have a boilerplate ESG policy. Spend some time with a consultant and think it through. And you will be challenged by your board on governance best practices, because that's been ongoing for some time. Diversity and inclusion probably falls more under the yes, and that's where I go, well, that's the HR department and the policy within the manager. And as a fund board, we have the right, as a fund board contracting the manager to manage our fund, to ask questions about that and to prompt thinking. I don't think we get, as independent directors, we get involved in the weeds and going in and telling the manager what to do. But I think just prompting and talking and making sure it's an agenda item at board meetings ensures that there's progress. I know there will be more done by investors, but there is a role for directors, and that's just to keep challenging on the S side of the ESG. I would say on the environmental side, we kind of see that more in the investment process at this stage, the exclusion of certain portfolio investments. So my focus tends to be more on the S and G. And then one further point I'll say is, in Janita's world, it's probably easier to have the discussion because the LPA is often negotiated with all the LPs coming in at the outset for a closed-ended fund like joint ventures, right? With a hedge fund, you kind of get the documents delivered to you, and they change over time quite a lot as the hedge fund is open for subscriptions and has to keep updating it regularly for material events that affect it. And so the interaction with investors, unless there's a seed investor with the launch of a new fund, it's the board. It's the board that will prompt the fund manager to do the right thing, because the early stage investors will have the documents delivered to them after the fund is launched and after the PPM's been filed. So I think there's an advantage in Janita's world to engage with the managers early. I'm not suggesting we don't engage with managers on the hedge fund side. I'm just saying there's a real advantage to frame what you want at the outset in the private equity world and joint venture world compared to hedge funds. So the investors have a bigger say there than I would say in the hedge fund world, where they come in later and they might have a say on how practices in the investment manager change over time, as opposed to what they want to see at the outset. Yeah.
All great points. Often during an ops due diligence review, when I speak with managers and ask them questions about their ESG focus, and for those that are looking at their private funds or their portfolio company investments, and they have a list of questions, for those portfolio companies, I always ask them, are you actually doing the same in-house as well? So if you're focused on all this, diversity and empowering women or people of color and whatnot, but, what are you doing? So there has to be sort of that connection as well. Talking about boards of directors and, it's human nature when, bringing someone on as a board member to look for people that, they have things in common with. Often from a professional perspective, we tend to go within our network and select folks that we know or folks that are recommended from others that have similar backgrounds in finance and whatnot. So, Janita, perhaps if we talk about how you would define diversity on boards or advisory groups, I think it could take many different forms. And, if you can kick that off, and then we'll go to the other panelists to get their thoughts.
Oh, absolutely. So it's interesting. I'm just now having a conversation with my board on the non-for-profit side. Slightly different sector, but we are talking actively about how to engage people of a younger generation, because we're servicing younger people, right? And we want to be relevant and connected to that demographic. We're also always trying to find more folks who have experience in technology for a host of reasons. And then when I look at my professional life and looking at advisory boards for different venture assets that we have, as well as potential actual board members, as many people know, the board members are those who are the investors on the cap table. Eventually, that will evolve to more independent board directors, as Gary has referred to, and really taking an assessment of what skills you need on the board. So instead of just going to one's Rolodex, we actually go to our skill set and say, okay, if we have someone very wise in tech, or a couple of people very wise in tech, a couple of people very wise in marketing, et cetera, just go down the list to see what skills we may not have gathered around the board table at that time. And that really helps determine what your north, your true north will be in terms of your searches for board members. And it evolves over time. So the type of board member you need when you're a 3-year-old enterprise is a different type of board member you may need when you're 10 or 15 years old, and whether you decide to go public or not. So all of those are very, very interesting considerations. And the last thing I'll say on this topic is the following, is that we have data that shows teams outperform when there's a diverse group of people contributing to solve the problem, right? So you avoid groupthink, you avoid the homogeneous nature of thinking and in attacking problems and solving for those problems as you diversify your board. So when I think about board candidates, I think about who doesn't look like me, who doesn't fit into my age demographic, who may not work in my industry or the subsector of my industry, who may not have come from a same socioeconomic background as I did. And all of those points will help determine and help ensure a very diverse consideration of candidates going forward. Thanks.
Gary, Michelle, any thoughts on that? Or how you would define diversity in a board?
I mean, I think Janita really hit the key points in terms of looking at different industries, backgrounds, et cetera. I think I'll get into this a bit more. Of course, you can't ignore that folks are also considering diversity by gender, race, and ethnicity as well. I think I saw maybe just in the past few days, the last company on the S&P 500 who didn't have a female board director now does. And public boards has been a priority, particularly in the United States for quite some time. I haven't seen any data on private fund boards, so it's hard to say exactly what that looks like. If we look, again, by things like, well, any marker of diversity, I don't think I've seen it by function in past life either. But, it is certainly a question that's beginning to be thought about in a different way.
Yeah, I agree with everything Janita and Michelle have said. I will add one thing. It does differ across jurisdictions. What's important in New York and LA is very different to what's important in Hong Kong and Singapore. And one needs to just respect the differences. And in Hong Kong, gender obviously is important. Equally important for many of the managers is mainland versus Hong Kong Chinese to make sure that there's the balance. And when you have a mainland manager operating from Hong Kong, there is a tendency to want to employ your own. And so as a board director, the importance there is to counsel for diversity on the trading floor and in the investment department. What I find, and I'm going to kind of generalize now, but what I have found in recent years is the functional part tends to be where the support part of the manager tends to be where I find most diversity in IR, finance, legal, and not enough on the trading floor. And so there's an area that we try to prompt that managers should look at that and that HR practice. But again, Janita and investors who invest in massive big companies probably want it more structured. When you're starting off with a new manager in Hong Kong and they're trying to raise their first 500 million and they got 10 people, I find the after the board meeting chats at the dinner table are what are far more important in terms of mentoring and counseling the managers to come a long way. And I had that happen to me 10 years ago by a delightful lady who Michelle will probably know because I think she's involved in AIMA, Elaine Davis, at one of my managers. And after our board meeting, Elaine challenged me at dinner why Highwater wasn't putting forward more ladies. It was that soft discussion and the prod from her that got me as the founder to look at what skill sets we wanted, and then having defined them and the expertise I wanted, to consciously go out and find the right people, the right females for that, and do whatever I needed to promote them into positions where today they're directors on Highwater, and they do the job without any focus on gender because they're just extremely competent at what they do. But it's that side of it that I find is important. I do all the reading around benchmarks and the need to measure and what is diversity. But when it comes back to trying to make progress, sometimes it's that quite prodding, using your credibility within the industry to push things like that are most helpful.
And I think you demonstrate the importance of intentionality, and maybe I'm jumping the gun in terms of our conversation, but it was that prodding that got you to think about it in a different way and realize that it was achievable with a bit of focus, right? As you noted before, when we look at glaring diversity, underrepresentation, it does tend to be those risk takers on the investment side. There's quite a lot of women in back and middle office functions, investor relations, operations, legal compliance, backgrounds that well suit themselves for directorship. But sometimes it's tapping those people on the shoulder to make sure that they put their names forward. Sometimes it's, asking the question, whether you're the investment manager or allocator, to see that's in focus. And I mentioned gender because that's where we do have data. We tend to have data on gender and far less so on race and ethnicity. But probably anything that you say about gender is even more problematic on those frameworks. We just don't necessarily have the numbers.
Yeah,
so
and
before...
I think statistics from my side, just when I look at my own personal portfolio of clients, all the ladies who sit on boards with me have been appointed in the last 4 years of my 15-year. So that says a lot, maybe from where we've come, but also disappointing that, we needed that prodding 10 years ago. But I look at it and I go, well, actually, we've made progress. Now, there's lots more to do, and we have to keep it up. But it's the same with governance in hedge funds. There's so much that can still be done. But when I look back to where we were when I started, 2000, well, we've come a long way. Back then the checklist was, are you an independent director and were you appointed at the time of the launch? Yes. Okay, thank you. And that was the checklist. Now you're still on the phone after 2 hours with the ODD team. So there's been a lot of improvement in the industry, and I think sometimes we need to recognize that while we still also push hard to make further improvements.
So before we proceed, I just want to remind the audience to please feel free to send over any questions. We're happy to address those. So just, in regards to, we're talking about diversity, talking about bringing, folks in with different backgrounds. There's a fine balance between just bringing someone in to check the box. So how do we ensure, or how does one ensure from, an ODD perspective as well, that the board members are a right fit and effective and not just someone that's meeting some sort of requirement? So Gary, do you want to kick off with that and then we can go around?
Sure. Look, I think I'm going to sound like a school teacher now when I come up with all the C's of the board, but actually it just helps me remember all the time what we look at. And character for me is very important. Having somebody who can speak out, not going to be shy when the tough get, when it gets tough with issues we have to fight the manager on. Competence, obviously, and now all of these you're going to notice they are gender diversity neutral. I mean, there's nothing I'm going to say that a particular characteristic belongs to one, gender or ethnic group. Confidence at the table, communication with investors, being willing to communicate, capacity. People always talk about people who have too many directorships. And when you kind of wrap all of that up, to get to the composition of your board, that's where I say, right, now we've got all the short list of people. How can we make the board more diverse and inclusive if all of our candidates meet the criteria that I've just mentioned? So the composition, the final composition of the board should come after you put that short list together. Who's on the slate? Get all the things that you want in terms of those right attributes. And then once you've done that, carefully put the composition of the board together so that you do try to meet, the diversity desires of our industry, and as that evolves as well, right?
I think that. Oh, go ahead, Gary. I'm sorry.
Sorry, I was going to just end with, and of course, once you've been in the industry for a while, you start to recognize people that you work with that have all those attributes, and you've gone through issues, and you prefer to work with them. And so you will find that there are independent directors who have a few common directorships with people because they're just confident working with those individuals, right? So that part I understand. You do see some common directorships. The important part for me is the part I said, get that short list of candidates with all the right characteristics before you make the decision on the composition. Okay, thanks.
I was only going to add that, Gary, to your point, composition and culture of a board are so very important. So you can evaluate each board director as an individual and what he or she can contribute to the board, but then you also have to look at the whole body and the body as a collective, and making sure that you hit the targets that you need to hit there, where the independent members will challenge, ask questions, not be silent, bring their level of expertise to the conversation. I think that most women and people of color, if given the opportunity to be the first on a given board, would welcome it. And not from a tokenism perspective, but from a empowerment and enlightenment perspective. Let me be the first to show you on this board that this individual has the right character and the right competency to contribute to the composition and the culture of the board. And I think that if the motivation is different, either from the board or from the individual, it'll be very clear as you have conversations with him or her. These conversations aren't one moment in time. There's a series of interviews over an extended amount of time. There's a lot of due diligence that's done, both formally and informally. And I think that sort of anyone who's motivated will show themselves very quickly on either side, and you can move on from there. But I think most people, if given the opportunity to be the first, will embrace that and will take that role very seriously, because they want to help diversify and continue to help organizations diversify over time. So I think about the first woman on the first Wall Street board, the first CEO of a Wall Street company that just happened this year. And I know that she doesn't want to be the only one. And she, A, has to do a great job sitting where she sits now, and B, continue to ask the questions and create the culture where you embrace various backgrounds and skill sets. Thank you.
And I would add a nuance and then go through a couple of points. So, Gary, I do agree with what you're saying. I would just challenge that if you, after going through that screen, if you consistently get a group of folks who look like each other, you probably should also think about how you're sourcing those candidates and see if you can cast a wider net. And certainly, it's not about lowering standards, but sometimes you do have to be more intentional. Because, just anecdotally, I do know very experienced women, and they've been really struggling to find board assignments, and it's not for lack of experience or expertise. So I do think that, because perhaps how informal some of the sourcing is from word of mouth and relationships and clubbiness, it can have an effect of reinforcing, same for same, since, as you noted, it's been rather late to diversify. So I think there should be a node to, just questioning your own process for sourcing candidates if you're not getting that diverse pool that makes it through those rounds of chats. Proper due diligence is a must, right? That referral is just the starting point, and then you have to check. I also have a laundry list of sort of other factors to consider, just because we've been going through this exercise as we've been updating our guidance on fund governance. So, you have prior experience on alternative fund boards or of alternative funds, although, acknowledge that you got to start somewhere. Knowledge of risk management, knowledge of principles of good governance and industry trends. You might look for a legal background. And again, there's nobody who has every single one of these things that I'm going to be listing out, and knowledgeable of applicable regulatory regimes. There's technical knowledge of the fund's investment strategy, a knowledge of accounting and fund admin, knowledge of valuation, knowledge of investor requirements, especially as they continue to shift, a knowledge of cybersecurity, and that knowledge might be gathered by being on the asset management side, risk management side, a legal or compliance seat, an ODD seat, an audit, fund admin, IT, and we're even seeing, to our earlier point, a demand for, perhaps a greater level of expertise in things like ESG. So there's a lot of skills and a lot of perspectives that a composed board has to bring together. And again, as you think about it, through all of these layers, not just gender, ethnicity, and race, but, also these experience factors as well.
Absolutely.
Yeah, that's a great point, and perhaps we can talk about that a bit, because as an ODD professional, I remember several years back, one of the things that we pushed for diversity amongst boards at a fund level is we didn't want to see several board members from one directorship firm. We wanted there to be, a board member from Highwater, a board member from another organization. To see that there was a, challenging and a different review of the fund manager and different probing of questions. So, as an ODD professional, especially if you're working for a larger allocator, you tend to have, I don't know, you can flex your muscles, but you can, somewhat encourage a fund to make those decisions. So, maybe Janita, we can start with you. What can investors do to encourage this or to move this along?
Investors can do a lot. They can be very explicit and intentional about what type of managers they're looking for and what type of boards and advisory boards they want to be affiliated with. They can also have greater influence the larger size of the check they're writing into the funds, and the more consistent at which they continue to support certain GPs over time. So investors can do a lot there. I think investors can also highlight, by example, making sure that their own staff has the diversity that they're seeking with their GPs, and be the change you want to see, so to speak. So investors have a huge opportunity set to really move the needle in the D&I space and to tackle a lot of the issues that we talked about. Pipeline, access to capital, and education opportunities are all ways in which investors can help contribute to that.
Yeah.
Thank you. Okay, please go ahead. I think we're almost up on time.
Yeah. I was going to add, just in support of what Janita said, practically I see investors who write large checks. They come with a side letter that requires change. And then they ask for quarterly compliance certificates that address progress of the change that they required in the side letter. So, there are investors who take it beyond say, yes, these conditions with which it comes, please address them. So, it can be done not in a bullying way, but in a more forceful way, requiring the change that the investor wants if they're going to write a check for $200 million.
Well, unfortunately, that's all the time we had today. It was a wonderful discussion. Thank you so much for participating, and thank you all in the audience for joining us. Enjoy the rest of the conference.
Thank you.
Thank you.
Thank you.
All right.